I've been doing this vlog for a while now, which means I've talked to a ton of people and I've put on a handful of trades. Some have been winners, some have been losers, but I've learned a lot from all of them. So this week I wanted to take you through some of my favorite trades that I put on, how I managed them, and how they turned out. So to start out, the other week I talked with Tony and Jamal about technical analysis, and I asked them why they think some traders may or may not see value in using technical analysis.
I didn't grow up with technical analysis.
I think technical analysis kind of helps give you market awareness.
I did get my directional bias by checking out the charts, and then I went to the options chain. That's something that I like to do, but it's 53 days till expiration. I'll manage this trade around 21 days till expiration. But if I'm able to collect 50% of the credit that I received on the trade before 21 days till expiration, I'll go ahead and take the trade off. I'll manage it ahead of time. And I actually still have that trade on. There's 38 days left till expiration. I sold the 380 puts. So you can see we're actually getting kind of close to it being tested because of all the craziness that's been happening this week. And we've been seeing a little bit more downside. So we'll see how I have to manage that position. There is still 38 days until expiration. So we'll have to just be patient and wait to see what the market does for the rest of this week and next week. And then maybe I'll manage it before then. But my overall bias on this trade has changed a little bit. You know, it was bullish. I was looking for a move to the upside, maybe just looking for theta to do its magic and just suck the premium out of those contracts. But we're testing that level now so soon that my bias is definitely bearish. And at this time, I'd prefer to have on bearish positions. I have a little bit shorter time frame positions on in SPY right now that expire at the end of the week. But my bigger picture time frame trade, which is a 38 days to expiration, which expires in April, is still on. And again, I don't even know if I'll still have this trade on by the time 21 days reaches. So maybe I'll have to manage before then, but I still have that position on. So when I wasn't sure if the trend was my friend, I gathered a group of experts to help me decide if I should be a contrarian with oil.
The majority of people are usually wrong. Everybody seems to follow the same trend or the same hot stock or hot commodity, whatever it is.
And so if the trend is going higher, then I guess I'm a trend follower. But if the trend is going lower, I guess I would be a contrarian.
This time with oil, I'm going to take the contrarian approach. So here's an MRO trade that I put on. This is Marathon Oil Corporation. I sold the 30 calls, and my break even is sitting around 32.22, which is right near the highs on MRO in the past 6 months. So I'm pretty comfortable with that and how the position is sitting right now. Let's see if I made the right call. So I sold my strangle for a total credit of $1.86, which is $186 in credit. And after 2 days, the stock price moved up. So I rolled up my put side to collect an additional 36 cents of credit, which converts into $36, and then I ended up closing out my trade about a couple weeks later for about $53 in profit. So nothing too aggressive. I wasn't able to get 50% of the credit that I received on that trade, but I was comfortable with where I was at. I was happy that I was able to roll up my put side a little bit, and I think I managed this one pretty well, even though I wasn't able to reap the type of profit that I would really want on this trade, but I'm not really trying to be greedy either. So that was MRO. So a few weeks ago, Julia stopped by to explain herding mentality and how these patterns can show up on 52-week lows.
When, an underlying hits a new 52-week low because of a down move, there's a really high probability, with SPY there's actually like a 74% chance that it's going to hit a new 52-week low within the next 7 days.
And how you can use this data to help you place trades. So I did just that. I used the Tasty Trade watch list to help me find 52-week lows. I was looking at VFC, and if we go to the daily chart on VFC, it's sitting at or near its 52-week lows. I mean, maybe sell the 29 strike. The pop is 77% and the buying power is just $330. So it's not too bad. And this is an undefined risk strategy. So we got filled right away in VFC. So let's jump into the platform to see how this trade turned out. This was also a naked position. This was an undefined risk position. The underlying is a lot cheaper, so I'm able to put on an undefined risk strategy without having to worry too much. And I was able to sell this call for $56 or 56 cents worth of credit. And I actually got out just a few days later, and I got out for 50 cents worth of credit. So I only netted about $6 worth of profit, which in my mind, although it was a profit, I kind of see these trades as a little bit more of a scratch. After I put this trade on, I wasn't really too comfortable being in anymore, so I wanted to get out. It was a naked position. I personally think that's okay. If you're ever in a trade that you're not really comfortable with, you don't really know why you're in, especially if it's undefined risk, I personally think it's just fine to get out of the trade and take it off and go find another one. So that was VFC, not as exciting, a scratch trade, and we'll call it a day. So last earnings season, I spoke with Nick about the do's and don'ts of trading earnings, and this is how it went.
Earnings trades generally, if you're playing them short term, are instant pain or instant gain type trades.
You know, option prices are getting more expensive as it leads up to that binary event because people are buying options to speculate. So I was thinking to myself, well, if I sell an option and collect a credit, you know, maybe the value of these options are going to be going up. So I don't know if that's going to be the best thing to do. So I chose to just go with Netflix. I ended up selling the 315s. And I bought the 310s. So that's an exciting trade. We'll see how it plays out. So you can see that I got in January 18th and I ended up getting out January 20th. I collected about $2.04 in credit on the vertical spread that I sold. And I ended up closing this vertical spread for about $1.15. So I almost got about half of the credit I received on this trade. It was pretty close. So it was about 90 bucks in credit after closing out this trade. If I would have held a little bit longer, I'm sure I could have made a little bit more, but hey, it's an earnings trade. I was looking to capitalize on volatility contracting, and that's kind of what happened. So I'm happy with this trade. So the other month, Dr. Jim taught me all about Delta, Theta, Pop, P50.
There's only 3 ways that you can make money: Delta, Theta, or Vega. Direction, time, and volatility. That's it.
And I used everything I learned to put on a trade. So Delta gives us our directional bias, and I've Meta pulled up. It's been beaten down the past year, and I'm feeling a little bullish on Meta. And I'm gonna sell a put spread, which is a bullish position. I'm gonna sell the 150 strike, and I'm gonna sell the 145 strike. You know, my deltas, I'm comfortable with that. P50, comfortable with that. Pop, my probability of profit, I'm comfortable with those things. So I'm gonna go ahead and send this trade through. Hold your breath. Let's see if we get filled. There we go. Instant fill on Meta, P50, Pop, and Delta. So I sold the put spread. I sold the 150 strike, bought the 145. I collected about $1.41 in credit. I typically like to, at minimum, collect a third of the width of the strikes, which is around $1.66. But I was still comfortable taking this trade, so I put it on, and I actually ended up taking it off a little sooner than expected. I bought the contracts back for 88 cents. You can see right here, about 8 days later. So September 1st, I sold it. 8 days later, on the 9th of September, I bought it back for 88 cents, and I made about $53 in profit. So that was a quick little trade. Took it off sooner than expected because I got the move sooner than I expected. But Dr. Jim was really focusing on deltas, and I was really looking at my deltas when I was choosing those contracts. So that's how that trade went. So hit confirm and send on that subscribe button, and check out the video that had the best performing trade.